Good evening. Hope everybody is well. Let's wait for a few more people to turn up. The numbers are starting to come in. Evening, Dr. Isaiah.
Good evening, Charles.
Awesome. Maybe this time I can take this time to introduce you guys to the webinar this evening. We can't seem to have like LemFi related music, but maybe I can take this time to introduce you to LemFi and why we are here this evening, so that when our guest arrives, all we'll do is just like hand over to Isaiah. So first of all, welcome to the evening. We are going to be talking about investing in Nairobi Stock Exchange, and our guests are Dr. Isaiah Oino and Mbithe Muema, who's going to be with us shortly. That's the guest that we have today. Let me also tell you about the host, who is us, LemFi. LemFi was established in 2020, and it only had one goal, to simplify the process of sending money home for Africans. LemFi is currently licensed and operates in the UK, USA, and Canada. And the supported countries are Ghana, Rwanda, Tanzania, Uganda, Nigeria, Kenya, Benin, Cameroon, Ivory Coast, and Senegal. LemFi, Africans in the UK, USA, and Canada can send money home at the best rate, securely and instantly, with zero transactional fees. Just use this. If you can just scan on this, it will just lead you onto a code. Alternatively, if you've already started downloading, you can just enter a webinar code or pass it along for somebody to get back £10 if they send over £50, over £100. Thank you. Let's keep an eye on our guest is also here now. So I'll open the floor. I'll start by introducing Dr. Isaiah Oino, who we've been talking to, who will take over the floor and then allow our host for this evening. Thank you. Over to you, Doc.
Just 2 minutes.
Okay. Maybe while we wait for Dr. Isaiah, maybe everybody can do us a favor by typing where you are on the Q&A, so that we can know exactly the looks where everybody's at within the country or outside, with your name. Obviously, we'll see your name. That would be very, very helpful. And say hello.
2 minutes.
I'll start. My name is Charles, and I'm in Reading. Hi, Dr. Isaiah.
2 minutes.
Sorry, guys. It seems like Dr. Isaiah is having struggles. Just bear with us for a second. I see we have some guests from Coventry. Nice to meet you guys. We were over there over the weekend. Lovely place there. We look to come over for more events going forward. Leeds. Okay, nice one. I think we'll be coming over there in November. We'll be lovely to meet with you guys. I think Dr. Isaiah is back with us.
Yeah, sorry about that. My name is Dr. Isaiah Oino. I'm the current chair of Stoke UK Diaspora Sacco, and I'm also act as a marketing consultant for LemFi. We are privileged to have our guest speaker. Muema is the Chief Business Finance Chief Business Officer, Nairobi Stock Exchange. Nairobi Stock Exchange is the leading stock exchange within East Africa. And we are privileged to have you, Mbithe. We know your time is precious, but we also tap onto your experience that you have. Why Nairobi Stock Exchange? How do we invest? What are some of the benefits of investing in Nairobi Stock Exchange? What are some of the modalities on investing in Nairobi Stock Exchange? I tell you what, most of Kenyans, although they still have one leg in, they are very keen investing in Nairobi Stock Exchange. So we're very
Hi, Doc. Have you dropped off again?
Sorry, thank you. I will hand over to Mbithe, who is going to do a presentation on Nairobi Stock Exchange. Welcome, Mbithe. The floor is yours now.
Thank you.
I think you might need
so
a bit
much.
of presentation. Do you need to present? Do you need to share your screen, Mbithe?
Yes, I would like to do that kindly.
Okay.
Okay, Charles, can you make our host, please?
Yes. Yeah. Sorry, Mbithe, just give me 1 second. I think Mbithe, you can make host. I think you can present, no?
Not yet.
How about now?
Maybe let's give it a few. I'm still not able to present. Have you given me the right?
I'm attempting to. I think I'm struggling here, but just give me 1 second.
Not to worry.
I'm using Zoom. Do you know how to go about it? Because
All right.
Charles,
On your
you need to make a host.
yes,
Host.
yes, just a second, Dr. Isaiah. 1 second. I'm trying on the app.
Charles, you need to go to where her name is and
Yes,
click and make her a host, please, or a co-host. You know, when you go into the participants, go
yes,
into her name
invite.
and then click on that and make her a host or a co-host, please.
It doesn't have that option. 1 second. Just give me a second.
Okay, no worries. But I can also speak through it, so it's not a big deal. Then we could always share.
Okay,
our
maybe you can
slides later
start,
on.
and then while we are at it,
Okay.
I can
Great.
attempt.
Okay, good evening, everybody, and thank you so much, Isaiah, for having us on the call. As mentioned, I work with the Nairobi Securities Exchange. It's the only exchange in Kenya, and it's also the 5th largest across Africa. I'll talk about our valuation, but it's in shillings. We have 62 listed opportunities. They're valued at 1.6 trillion Kenya shillings. About 2 years ago, we had actually picked at 2.9 trillion. But because of rising interest rates and a bit of the weakening of the local currency, we've seen that valuation come down to about 1.6 trillion. We're also known for listing of government bonds, which are currently valued at 4.1 trillion. And both of these market platforms easily represent about 43% of Kenya's GDP. And that actually then makes us a very pivotal part of the financial ecosystem, because we do act as a barometer for what is happening in the economy. We have listings in local companies. We also have cross listings, and we are largely known for shares, but we also have newer products. You can be able to trade derivatives, single stock futures on our exchange. You can also be able to trade real estate investment trusts on our platforms. You can trade ETF. Gold ETF has done extremely well in our market, and we're seeing a lot of interest from issuers, especially from cross listings out of London. And last but not least, we also facilitate capital raising via green bonds. And we actually have one that came into the market in 2019, and it's cross-listed in the London Stock Exchange. For today's conversation, I was hoping to sort of then delve into some of the products and some of the associations that we have as an exchange, with a focus on potentially how you can access information about us if you're interested in finding out how you can trade and participate in our market. As I get into that, let me join as a panelist. Thank you. I'm on as a panelist. I'll share my screen in a few minutes, in a second actually. Please give me a thumbs up if you can see my screen, or maybe just a simple yes.
Yes, we can.
Okay, thank you so much. So I'd started off here on how we are currently organized, and I'd covered the upper part with regards to the products that we have and what you can do on our platforms. And the lower part is really now an overview of how we operate. We don't operate in isolation. We are part of the World Federation of Exchanges. We work with different exchanges. In fact, we're doing a roundtable for issuers with the London Stock Exchange in November. We work with Johannesburg Stock Exchange. Last month, we'd gone for engagements with the New York Stock Exchange. So we're always ensuring that we are globally sound, and we have best practices and best platforms, and we have a diversity of product offerings, whether it's for investors or for potential issuers. This is our current board, just for your reference. Our chairman is Mr. Kiprono Kitoni, and he's affiliated a lot and has done a lot of work with SMEs, brings that experience to the exchange, and that has been helping us then curate a solution for SMEs. Our chief executive is Mr. Geoffrey Odundo. We also have a mix of local and global investors who sit on our board. We have Mr. Michael Turner, who is the CEO of Actis, and that's the company that owns Java. We have Mr. John Newpold, who's an independent director and has been investing in sub-Saharan Africa for about 30 years now. We also have Ms. Carol Karaoke, who's at the bottom right. She's the CEO of Kepsa. And then Stephen Chege is with Safaricom and now Vodacom. And Isis Nyong'o has done a lot on fintechs. So we have a blend of intermediaries, and we also have a blend of the private sector, global and local institutional investors. So at any time we're coming up with products and our strategy is actually aligned to what the market needs, and we have a sounding board to ensure that we are on track. That's our management team, and we have different leads. So technology is a big thing for us. I'm in the business development team. We have our legal officer, our legal counsel, and our head of strategy, a diversified team that then ensures that the operations of the exchange are up and running. I wanted to give you an overview of what we've traded in this particular year. 2023 has not been a very good year, not just for the exchange, also for the economy broadly, and not just for us. I think you've probably had a tough year as well in London, in UK, in US. Everywhere has probably been hit by the fact that US rates are rising, which has had an impact on currencies and also local domestic interest rates. That said, this year we'll probably close the year at about 100 billion shillings worth of trading revenue, whereas our bonds platforms will probably close the year at about 800 billion with regards to market trading. I mentioned that we have derivatives, which is a new market for us. It was launched in 2019. You can get single stock futures. We were hoping at inception that we could facilitate currency derivatives in Kenya for different pairs. We're still working on that with the Central Bank of Kenya, but that is yet to come in. And of course, then we've been exploring if we can introduce interest rate futures on this particular platform. And then the last platform that we have is the unquoted securities market platform, which is a fundraising platform for SMEs, and that has done extremely well. Now, today's conversation, I think, will probably be more of a plenary because I wasn't too sure exactly what kind of information I needed to bring in. So I'll share this and a lot more information depending on the needs for the audience. But our focus really was, what value do you actually get by coming to the NSE? We have 62 opportunities, and right now our market is at a 7.5 times PE ratio. It's the lowest that we've seen from the early 2000s. Some people have interpreted that as the worst time for us, but if you're actually a long-term value investor, it's actually the best time for you. 7.5 times means that you're buying companies that are still growing with regards to their revenues and profitability. Safaricom, the banks, EABL and BAT, the large blue chip companies that we have actually been reporting good revenue and profitability appreciation year on year. Whereas the market has actually been a bit off because the foreign investors have been coming out of our market, largely because of weakening macros and what's happening globally. So as they sell out, then demand for shares actually dissipates. And then you have the price, which is representing demand and supply for shares, as opposed to the price representing the value proposition for the companies. So there is an opportunity to actually participate over a 1, 2, even 3-year term, medium term, and look at some of the opportunities that we have on the exchange with a focus on how much dividend you can get from the stocks on the exchange. Dividend yields are doing very well because the market is highly discounted. It's a perfect time to buy. I think Safaricom is at about 12 shillings. If you buy it for maybe the long haul, we had it peak at 44 shillings just 2 years ago. So depending on where you're at, you probably want to allocate a little more capital to some of the good companies which have a good dividend yield and have a strong growth trajectory, and you get them at discounted prices at this point in time. When it comes to the dividend yields, Muema is our highest yielding stock. It's currently giving you a 17% return. Muema is the equivalent of KPLC in Uganda, and it's cross-listed in our market. Williamson T is at 14.63, and in the banks, Standard Chartered is giving people a dividend yield of 13.3%. So if you buy the stock based on the way prices have come off, with your dividend, you can actually earn your share, you can actually earn your capital in about 7 to 8 years. But then if you actually factor in the capital appreciation, you could make your money back between 3 to 5 years. But you would need to be then selective with regards to what are the companies that you're looking at and looking at their financials and appreciating where they've come from and, more importantly, excuse me, where they're going to. What we've then now done as the NSE is then tried to make your investment journey into the NSE a much, much easier process. We launched the Dosika app, which gives you historical information, gives you real quotes, and you can actually go on there and trade on the day. One of our intermediaries is actually facilitating real-time settlement, meaning that if you buy and sell your shares today, you actually get your money today. But traditionally and historically, the settlement cycle has been on 3 days. So if I sold my shares today, I'd have to wait till next week on Tuesday to get my money back. This intermediary is called AIB Access. And if you actually download this Dosika app, you can actually be able to open an account within a day and be able to trade with them. It's available on iOS. It's available on Google, the Play Store. It really just depends on what you're at, but I think it's a good point to start by just getting access to information. If you download it, even without opening an account, you can be able to see all the trading information that's there, all the 62 plus entities that are listed. You can see the historical prices. You can see what the projections are. You can see what the valuations look like. And you can then start to interact and see how our market operates. The next step would be then to open a trading account, and it allows you to pick an intermediary through a drop-down menu, and then you can start your investment journey. It's just as easy as downloading the Dosika app. I think let me probably put a pause here because I could go into detail with regards to all our products, but probably there's a bit more value in then listening in and answering the questions from the plenary, because I'm sure I've not captured everything, but I do have a few minutes that I can be able to then address this and more. Thank you, and back to the coordinating team.
Information. I will ask you 1 or 2 questions, then I'll allow the audience to ask you a few questions. Why Nairobi Stock Exchange to start with? Why no South Africa? Or Joburg Stock Exchange?
You have a diversity of products. You can invest in any market, and any market that you're investing in, you're looking for a return. Today, we're the most discounted market in Africa, meaning that we have the best recovery trajectory. Just last year, Sri Lanka was actually one of the worst markets. This year, it's the best performing market. So the potential for upside is actually much greater in our economy than you'd probably get in other markets. So if you're looking for an investment opportunity, then you want to consider that. Then secondly, if also you're from Kenya, you get to participate in the Kenyan economic growth story. And if you look at the statistics that are coming out from the IMF, from the World Bank, you can actually see a lot of upside in terms of the growth that is coming from Kenya as an economy. And if you look at the opportunities there, you're getting them at discounted rates. It's like saying you're buying a Mercedes-Benz, but you're probably buying it now at a price closer to a Toyota, not because the Mercedes-Benz has actually lost its value, only because the demand and supply dynamics have changed, allowing you to buy a Mercedes-Benz at a very discounted rate. So I'd say the market valuation is good. Dividend yields are good. If you're selective and you pick good companies that have good growth trajectory, you'll make a lot of money over the medium term.
Excellent, excellent. Thank you. And I think also one of the questions that I normally get people asking is that, where do I start from? You mentioned in terms of identifying the intermediary, and that is our local banks, KCB, Cooperative, mainly there are people who deal with that. How easy it is, you mentioned in terms of using the app, and the issue that perhaps you might want to cover briefly, and then I will allow 1 or 2 questions to be asked, is the risk associated with investing in Nairobi Stock Exchange. Is there any risk?
There's a risk. There's no investment that doesn't have a risk. When you buy land, there's a risk that maybe the certificate will not be legit. Even when you invest in London, whether you've even in the London Stock Exchange or whatever investments that you make, there's a risk. For equities, we say it's a bit of a higher risk and a higher return. What that means is that you don't necessarily want it to be your first investment class. You want to probably start off with bonds that give you an assured return, or money market funds. And then as you make money off of that, you can allocate those returns into equities. If you start off with all your savings today and you put them into equities, you could double your money, you could lose your money. So you don't want the money that you're putting aside for emergency funds to be allocated to equities. You want money that's for surplus, that you have extra money that you have. And then secondly, you don't want to put all your eggs in one basket. I think everybody said I can just do one asset class, but we saw Ghana default on its treasury bonds. So I'm not saying Kenya will default, or I'm not saying whichever country will default, but it's always just prudent to be able to diversify. Because remember, Isaiah, when you're making your investments ideally to build a nest egg for the future. So you're trying to ask yourself, how much do I want to allocate to different opportunities? Because one could lose money in 1 year, but over 10 years, you could also make money. What that also means is you probably need to be a bit more active in terms of what you do. You can rely on an intermediary, but you don't need to review. I think the way you go to work and every 6 months at the bare minimum, you do have a review with your boss, right? I think I find most of us, we make an investment and then you never look at it for 5 years, then you come back and you find it's no longer there and you're like, what happened? So you do need to get into that habit of what's going on the exchange, what's going on with interest rates back at home, how does that compare to other markets, so that if you need to change your allocation, you can do it very quickly. So that's the way I look at it. So look at it on a long-term basis. On a long-term basis, you do need to have real estate. It would be good to have commodities. It would also be good to have shares. It would be good to have bonds. And you have to then be able to appreciate what kind of risk is there and then keep reviewing. That would probably be a better way of looking at it from where I stand.
Thank you. Thank you. I'll open the floor for any question from the audience. If you have a question, you can unmute and ask, or you can put it on the chat.
Okay.
Charles, are you able to see any question?
No, I'm keeping an eye on it, and there's no questions. I think Mbithe has given us a very, very good, comprehensive bit of information.
Absolutely, absolutely. So Mbithe, you mentioned the strategy of diversification. You can't put all eggs in one basket, which is true. But also your advice is not to go straight to equity, because you could double your money at the same time you could lose everything. And you did recommend in terms of starting from bonds and money market, right?
All these things depend on where you're at. Let me give it another. There's no one size fits all. I'll look at what you eat. When you go to a restaurant, there's an entire menu, isn't it, Isaiah?
Yes.
I want fish, I want chicken. The older I get, I have more dietary constraints. Like personally, I can't, I'll probably try and avoid milk because I'm lactose intolerant. I wasn't lactose intolerant 20 years ago. So that means even as you have your investment journey, if I'm 25, I can go and buy shares. If I lose money, I still have some time to go to build my nest egg, because I'm in a space of I can take on a lot more risk. But if I'm probably 40 going to 50, you might not have the space and the wherewithal to take on that kind of risk because you have dependence. So I would not want to prescribe and say, this is the ideal way of doing it. What I'd like to say is there's some considerations that you can do. But now when it comes to the conversation of shares, now the question is probably, how do you make money from shares? You make money if the prices go up. Because for us, we're in a down cycle and all markets are cyclical. Then it means over the next 2 to 3 years, we're going to be in a much, much better place. If you buy Safaricom today, you're probably buying it at about 12 shillings, give or take. Isaiah, this is a stock that was 44 shillings just 2 years ago. You can either say it's the worst time, or you can ask yourself, what will it take to get back to 44? Not even that. If I buy the share at 12 shillings, making 10% means I only needed to move 1.2 shillings. I needed to move to 13.5. I've made 10%. If it moves again 1.2 to about 15 shillings, I've made 20% return. So if you actually get it off a low base, you're actually making money as it goes. You can never time the market. It's just a matter of appreciating what's going on. So when you actually download this app, then you get to be able to appreciate the price movements, because there'll be opportunities to buy the likes of Safaricom. The banking stocks are also coming off. The consumer stocks are coming off. Those tend to see a lot more activity on the exchange. Or if that doesn't work for you and you're looking for a dividend yield, you can look for the high dividend yielding stocks. Some of them are yielding yields similar to what you'll get in treasuries. But then you also have the upside of a capital appreciation. So I think that's the beauty of where we are at today in terms of just looking at our market and asking yourself, how can I make money in Kenya? I can either make money on government bonds, or I could probably even make slightly more, 25, 30%, depending on how I position. So I think the good point to start is first to look at these prices and compare them to what returns you get out there. But I think that it's a very, very good and opportune time to pay attention to the equities on the NSE.
Okay, it's the best time to put our eyes on the NSE because most of the stocks are lower now, and possibly it might be the best time to buy. And on one side, somebody could argue that perhaps the prices have gone back to equilibrium point, that they were overvalued. And the reasoning behind is what we've been told, I think 2 days ago, that the Kenyan shillings was overvalued. Could that be also another way of looking at it, that perhaps the stocks for Safaricom was overvalued, it's now gone back to equilibrium? Or are we going to say what goes down must also go up?
Valuation can be looked at in different ways. And the way we say beauty is in the eyes of the beholder, value could also be in the eye of the beholder. Typically, your valuation follows a scientific process. Either you look at your discounted cash flows, but then there's also an element of value that comes in purely from demand and supply. So we have a market that's at 7.5 times a PE ratio. It normally trades at between 12 to 15 times. So it's actually undervalued today. So it's actually undervalued largely because to demand and supply dynamics. And secondly, what has happened because of the currency, our market is largely traded by foreign investors. So because of what's happened in the currency, it becomes harder for them to allocate. Because for instance, if I wanted to buy shares on the NSE when the currency was at 120, I'm probably going to get more shares when the currency is exchanging at 150 to the dollar. So if I think that there's probably going to be more weakness, I'll just hold back. I could see value, but I'll hold back because I can get more value if it weakens. So that is not a dynamic that says that the stocks on the NSE are worse today than they were last year. It's more of a demand and supply dynamic, and also a factor of the fact that we actually have foreign and local investors. On the flip side, local institutional investors are actually been coming to the market and to buy because they don't have to factor in the currency risk. You're in London. Maybe now the question is, when is a good point to consider buying? I would say if you're allocating millions of pounds, any currency movement has a material impact on you. If you're not allocating millions of pounds, the currency impact is neither here or there because of your allocation upon conversion. So it depends on where you're at and how you look at it. So we are undervalued today. We are at 7.5 times PE ratio. Normally we are at 12 to 15 times. What then that implies to you is, as a long-term investor and as a value investor, there are some great opportunities for you to pick up and pay attention to.
Thank you. Thank you. Any question?
Yes, we have a few over here.
Good.
Maybe I can read all of them and then you can answer them as they go along.
All right.
So the first one is, what risk is associated with investing in the NSE? The second one is, where can we find more info on which companies to invest in? And the final one is there a minimum period of investing? What's the recommended period to invest in shares? Okay. That's the three.
All right. Thank you so much. As with any investment, there's a risk. You can make money, you can lose money. How you mitigate any risk is first and foremost by appreciating what the risk is. So if you understand what you're investing in, the better. But also what's unique about our market is we even have derivatives. So for instance, if you buy a Safaricom stock, you can actually hedge with a Safaricom derivative contract. So that if one goes up, then you'll make money on the derivative. You can actually use the derivative as a hedge. So that can actually be your strategy of coming into the market. And then secondly, when you're asking about information and intermediaries, there's the Dosika app, the one that I just reflected. I can just write it up here on your chart. Dosika app. If you download this app, it gives you a lot of information on how the market is operating, but also it allows you to get access to a stockbroker or an investment bank. When you open an account with a stockbroker and an investment bank, most of them then put you into their WhatsApp groups or into their investment communities, and there's a lot of information and vibrancy. They have webinars, they give you alerts when companies pay stocks, if there are material effects, that also gets information that is relayed to you. So I'd say download the app, then go to the next step, which is open an account. We have a list of investment banks and stockbrokers on there that then you can open an account with, and then you can be able to get the information on a timely basis to help you make the right decision. Then finally, on holding period, you look at your return and how long it will take you to at least get your capital back. Now, typically, the stocks on a normal day will probably give you 12 to 15% return in a year, which means that your holding period could be anything between 5 to 7 years. But now the thing about stocks is they go up and they go down. That's why I said there's the high risk and a high return opportunity. I could earn a dividend yield of 10%, but say I buy Safaricom at 12 shillings, then maybe in a year's time, it moves to 24. I'll have doubled my money, isn't it? So I'd have made my money back in less than a year. But then you also have to be cognizant of the fact that I could buy at 12 and then maybe it goes to 10. If it goes to 10, then I have to hold a bit more. That's what I was saying when it comes to shares, you don't want to put your emergency money. You don't want to put the money that you need tomorrow, because you really cannot dictate how the market will be. You can see trends, you can call out trends, but you can't really call a floor and call a ceiling. So you want that money that probably I don't need it now, or maybe I have a project that I have in a year or two, and then I want to allocate it. That's the kind of money that you want to allocate. But you really don't want to allocate your school fees or your rent, such kind of money that you need and you have obligations for. So that's really how you want to do it. And then a second way that I think, which is really a personal perspective, is there some people who maybe if I invested 1 million shilling, for instance, in treasury bills in Kenya, I'd get 150,000 as a return. So the way treasury bills in Kenya work is if you put 1 million shillings, the government pays you 150,000 upfront before you even put the money. So what that means is if I put a bid for 1 million, I'd be given, I'd actually pay 850,000 shillings only. So if you're smart about it, then you can say this 150, instead of eating my dividend, let me take the 150 to the stock market and see what's there. So you see, for that 150,000, if I make money off of it, if I don't make money, I don't lose my capital, because you really want to find a way that you're always preserving your capital. That's the only way you grow your wealth over time. So those are some of the strategies that are there. But even as you open an account and you begin to engage with the stockbrokers, you're able to get a lot more, because really then the conversation will be, where am I at as a person and how can I move forward and what decisions do I need to make?
Wonderful, wonderful.
There's a few more questions that have come in.
Thank you, Charles.
Maybe you can address them as well.
All right.
Okay. The first one is, do you need a CDS account to invest? What exactly are the derivatives and its relation to a particular stock, e.g. Safaricom? You talked about CDS account. Is it the same as the central bank CDS account?
Okay, great. Thank you for that. Yes, you do need to open a CDS account to trade. This CDS account for trading shares, it's very different from the CDS account for trading with the Central Bank of Kenya. So this one, if you go to the Dosika app, you can open it, because those are different asset classes. With the Central Bank CDS account, you get to trade treasury bills and treasury bonds. With the NSE CDS account, you then get access to trading shares. So there are two different accounts, and you do need to open, and you can download the app, and the app can facilitate that. Then the question on derivatives, I'm happy to share a lot more information on it. But derivatives, as the name suggests, is something that derives value from an underlying asset. So for instance, if you have Safaricom, we can create a contract of Safaricom, and it becomes a Safaricom derivative. So that if Safaricom is trading at 12 shillings, Buying it in the main market, the minimum investment you'd need is to buy 100 shares. So you just need 120 shillings to buy shares. But maybe there's a stock that's trading at 100 shillings. So my minimum investment for that would be 10,000. If I created a derivative, because of the way they are structured, you normally put in what we call an initial margin, which would probably be about 15% of the value of that stock in the main market. So with that, you're able to then figure out a cheaper way of accessing markets and be able to play the markets. And it tends to be something that is curated for sophisticated investors who can then hedge against risk. So depending on the trends that they see in the market, they can go against or for the market so that they make money. In the instance when the market is going, when the companies are coming off and they're losing value, a derivative person would probably go long. They will be taking an opposite bet on how the market is going. And if the market keeps going down, then they'll keep making money. However, if the market changes, then they actually lose money. So that's how they work. And for us, we have 10 single stock futures. So that would be something that then you use to manage the risk of losing money in the main market when you're trading Safaricom. I think I've answered all the three.
Yeah, you have, and it doesn't seem like anybody has any more questions.
Okay.
So thank you ever so much.
All right, thank you so much. You're very welcome. Thank you, Isaiah, for the opportunity. I'll share more information and I look forward to engaging, but then I stand guided on whether to remain on the call because I'm sure you have another agenda and I can always drop off.
No, thank you. Thank you. It's very technical. Some people might find this is very technical. And I think, as you mentioned, there are always going to be brokers and companies that can assist anybody who want to invest in Nairobi Stock Exchange. You can share those slides with me. Then anybody who is interested in terms of getting more information, I can share the slides with them. But I appreciate the time you've spent, and I'm sure that I will call you back again in terms of future engagement. Because in terms of technical information, it's very important. You've digested, you have put in a simple language that most people can be able to understand. So thank you very much, and I'll give you a round of applause.
All right, I truly appreciate. Download the app and invest back home. Just diversify between us and CPK. And yeah, actually, if you download this app, you learn so much. So please go ahead. And I think you're doing a great job in terms of these connections. If you do want us also to connect you to the intermediaries, we're more than happy. So that at least you can have sort of a chain of webinars where you make the connections. Thank you, and all the best. God bless you, Charles.
Thank you. God bless you.
Thank you so much.
Thank you. Thank you.
Thank you, everybody.
Thank you, Charles, and thank you, everybody. If you need additional information regarding investing in Nairobi Stock Exchange, kindly get in touch with me. I'll signpost you to people who can be able to assist you. We're here to assist you. Any form of investment that you need, we will give you advice, but of course, the decision still remains on you in terms of investing. But thank you very much.